The hidden origins of the Bank of England. How King Offa established early monetary systems. The impact of Jewish moneylenders in England. The rise of the Bank of England and its purpose. The consequences of war on national debt. The nationalization of the Bank of England. Section 1. Early monetary systems established by King Offa. In ancient England, King Offa ruled the Kingdom of Mercia from 757 to 791 AD. He is known for establishing the first monetary system in England, using silver as currency due to the scarcity of gold. The standard unit was a pound of silver divided into 240 pennies, marked with a star, which gave rise to the term sterling. Offa enacted laws prohibiting usury, demonstrating early attempts to regulate lending practices in England. Section 2. The role of Jewish moneylenders. The first Jewish population arrived in England in 1066 with William the Conqueror. They were allowed to operate under royal protection, often as moneylenders. Their practice of usury, charging high interest rates, led to significant financial exploitation among the nobility and common people alike, ultimately resulting in a large portion of English lands being controlled by Jewish usurers. Over time, the inability to manage interest payments on debts contributed to rising tensions, leading to the eventual expulsion of the Jews from England in 1290, under King Edward I. This event marked a shift away from usurious practices and laid the groundwork for future banking developments. Section 3. The establishment of the Bank of England. The Bank of England was founded in 1694 as a privately owned institution aimed at lending unlimited sums to the Crown at a rate of 8% per annum. The establishment came in response to the need for funding during wars, specifically against France. The bank was granted the right to issue banknotes without gold backing, setting a precedent for future banking practices based on fractional reserve banking. Despite opposition from various sectors fearing the bank's growing power, it quickly became central to British economic life, influencing monetary policy and control over the national debt. Section 4. The national debt and wars. As the Bank of England expanded its control over currency, the national debt increased significantly. Wars during this period, including the War of the Spanish Succession and the Napoleonic Wars, led to considerable borrowing, causing the national debt to balloon. The government resorted to a series of taxes to manage this growing debt, shifting financial burdens onto the citizens. Chancellor William Pitt the Younger attempted to reform this, but pressures from ongoing conflicts made it impossible to reduce the debt effectively. This pattern of war financing became a recurring motif in British history, often benefiting lenders at the expense of the public. Section 5. Nationalization of the Bank of England. On February 14, 1946, the Labour government nationalized the Bank of England in an attempt to place it under public control. However, the move did not change the underlying fractional reserve banking system. Internal operations remained undisclosed to the public, and scrutiny of the bank's practices became limited. In 1974, the establishment of the Bank of England nominees limited hinted at the persistence of private interests within the institution. This raised concerns about the transparency of its operations and how closely they remained tied to private banking interests. Conclusion: the enduring influence of banking practices. The establishment and evolution of the Bank of England reflects centuries of financial practices that continue to shape economic policies today. From usury to national debt generation, the foundations of modern banking can be traced back to these early practices. Understanding these historical developments is essential for recognizing current trends in finance and the ongoing complexities of debt and banking systems. The hidden origins of the Bank of England serve as a crucial lens through which to analyze the present landscape of global finance.